Welcome back, ladies and gentlemen, and thank you for your attendance. We hope you continue to benefit from these amazing ideas being discussed by our experts joining us today. We now move on to session number 4. Our next session is a panel discussion which highlights AI, artificial intelligence, changing insurance the way we know it. On our panel, please join me in welcoming onto the stage the General Manager of Bahrain National Life Assurance Company, Ms. Inas Asiri. Also joining us on this panel is the co-founder and CEO of Wealthy Therapeutics, Mr. Abhishek Shah. And the CEO of INFINITEWARE and AI researcher, Mr. Ameen Altajer.
All right. Perfect. Thank you, everyone, for joining. And hopefully, this will be an informative discussion. My name is Abhishek, and I'll be moderating this discussion. And the intent is to talk about things that, are a lot of buzzwords, but, bringing it back down to reality, what actually happens and what doesn't.
Test.
All right. So we're in test mode. And we have 2 amazing people here with us. We have Ameen, who comes from the AI world. He lives, breathes it, and works across domains, including insurance. And then we have Inas, who looks at models where you can actually implement it, and hopefully in the insurance world. And this should be an interesting discussion. I'm going to start up, by asking a very quick question, which is that there's a lot of names flying around, a lot of implementation strategies, a lot of solutions out there. But at the core, it starts with data. So what do you see is coming up in the world of data, where data is being used to then create solutions on top of that? Anything specific that you'd like to add on how data is being mined, or how data is being used or developed, or so that it can then be used to build models on top, which can be used in the insurance world?
All right. Thank you so much for having me in here. Such a pleasure. I think on the data aspect, there's a lot of fronts that people can go in. If you're an individual, if you're a business, big data is a very common theme that we keep hearing, right? So the trick is you have multiple channels in order to get data from your customers, be it social media, be it videos, be it their sentiment online, wherever possible. And the magic is all of this really adds up and builds a lot of value for you as a business. You can do a lot of prediction. You can do a lot of really strategic thinking in the short term or even the long term. And as somebody who really supplies AI solutions to a lot of businesses, I think the #1 issue that I see, the common theme is there isn't a lot of understanding illiteracy when it comes to data. So you go to companies and businesses and they want to have the state-of-the-art AI solutions like predictions, they want to have automation, but in the end of the day, whenever they don't have data, it becomes very difficult. So for me as a business, what I do is I have multiple layers or multiple, let's say, packages in order that I really provide to businesses. And the core package is data infrastructure. So providing this whole big data infrastructure that allows them to store their data the right way and to really utilize what AI has to offer. But yeah, to summarize it, I would say the common theme is understanding the value of data and really doing all those steps in order to provide the right infrastructure to get it. This is the main meat. If you're a business person and you're here and you want to get one of those AI solutions, the right thing is to have the proper AI infrastructure.
Got it. And maybe that same question to you is on the data builds a digital ecosystem on top, and then that data ecosystem then allows more data. Would love to get a sense on how you're thinking about using that in any form for the industry.
Yeah, just building on what Ameen had mentioned just now, the availability of such rich data for us as insurers, it changes the game completely, because if you look at the time which is the availability of such data to us, what happens is that traditionally insurers would insure a risk and then just wait for that risk to happen, like a claim to arise, right? And then you would cover it because this is a promise that we sell. So now with the big data and having all the technology and the facilities to manage that, we are in a position to actually go out there and proactively use that data to prevent these events from happening, which helps us in our excuse me, which helps us in our claims management process. So you're not only managing the claim when it happens, you're actually trying to prevent it. So, which is a very big thing now in insurance, in all lines of business, but specifically I come from the life and health background, so it's even more relevant to us. You know, we always believe that prevention is much better than waiting for the condition or the death to happen and then pay claims after that. The other point that I could think of as well is that when you talk about applying for an insurance policy, whatever that is, obviously there must be a set of data as well that's involved. Now, we historically relied on the data that is provided by the applicant, and you just have to take it and, you know, base your terms and conditions on that. But again, with the availability of all this data out there and being able to manage it in an efficient way, now you can proactively go out there, get the data, you know, with all the sources, again, relevant to life and health. You know, when you're talking about all the iWatches available now and the Fitbits and, you know, the health-related applications on mobiles and all of that. So now you can actually use this data to refine your offerings to your clients.
Fantastic. You know, maybe a follow-up question to that is that how does an insurance company ingest such data? And what does it mean in terms of the organization and the stakeholders? Because traditionally, the data streams were looked at historically. You had underwriters trained in actuarial models that actually could use this data. Now you have new data streams which not only have never been seen before, never have been trained before, but you also have these same data streams being looked at by individuals which don't, and the same rules of underwriting don't apply, where you don't have historical data to then predict. What does this mean for an insurer as they embark on this journey of embracing these new data streams and doing something with it?
Okay, I think I always like to say that I would start my answer by saying that a lot of people think that AI and all these advancements in technologies are one day going to replace all the human underwriters at some point. That may be a threat, but for me the way I look at it is that whatever we have now, it's facilitating the accuracy and the efficiency of our operations. So the impact on that, just to answer your question now, the impact on that on our underwriters and underwriting processes is that absolutely, the way I look at it, it's absolutely positive. Now, the two buzzing words that I'm going to use is that everything is going to be much more innovative and much more efficient. In terms of innovation now and also increasing your efficiency, for instance, I'll quote an example on life insurance again, right? So historically, or like a typical application would be that an application form would be filled up and then like health conditions are declared, your height, your weight, your age, and all of that. So now there is a move towards using all of that into and using facilities like, for instance, the facial recognition applications. And some companies, the bigger companies now are moving into that space, and they're just using a picture. So like you literally just send a selfie, and then like, you know, they would use that to determine your age, your gender, to determine your smoking habits as well, like smoker, non-smoker. Underwriting happens based on that, and your body mass index as well. So all the basic underwriting can be done using all this technology, and like, you know, if it's a very straightforward case, then the underwriting is done, the policy, the rate is also determined, and the policy is issued. So you have eliminated a lot of administrative steps there, and enhanced the customer experience quite drastically. So this is one way of looking at it. Another example that I could think of also on the health side now, because health is more popular in this part of the world than life, is that using the virtual employees, right? So automating the claims process, this is at a later stage now. So virtual employees, or like they call them doctor someone. So they make it like, you know, more real.
Yeah.
And then, you know, the conversation would happen there. So there's a lot of AI, there's the chatbots, you know, also incorporated into that, the cognitive automation as well, and all of that. And then you eliminate a lot of the admin also, and the inaccurate answers that could go out, and it would answer a lot of the basic questions that you would, as an insurance company, we would answer on the common coughs and flus, and where should I go, and what, you know, what are is this covered within my policy or is it not? So there is a move towards that as well. It enhances the customer experience. It cuts down the turnaround time, like, you know, the time we take to get back to our clients. And also it increases the accuracy because there are a lot of algorithms that are run at the background and they are taking care of it. So there is no way for human error in that instance.
I honestly, if I might add for a second, you know, we really underestimate what AI is capable of. As a technical person, you know, when you get to see those stats, you get shocked big time. For example, image recognition, which is a pretty complicated deal. You know, AI systems can now get that with accuracy of 99.7, like digit recognition or even facial recognition. And so, where I beg to differ with the lady here is in terms of underwriting, which is a very subjective aspect, to be quite honest, where you go and you assess the deal. I think AI, you know, with a lot of data can really be the best partner that you can have in doing all of that. So what I'm trying to say, like, if you really see the corporate world and insurance, banking, they're no different. And so there's a lot of common theme towards repetitive jobs. You know, those things where automation is going to definitely eliminate, there's no question about it. But on the aspect where you have to get your subjective sense into the whole deal, like checking if this is a fraud case, or if this claim is really worth it, or even dynamic pricing, as you mentioned at the beginning. You know, with a lot of data, what you're basically doing, you're somehow teaching your kid, in this case, I believe, like, think about it like as if the system was your kid. By parenting, you're giving them the intuition in order to go and do things the way you've done it across the years. So what I'm trying to say here, you know, under the state, AI should not be really understood. As a technical person, it's really doing some magical work on the subjects that we, for a very long time, thought that it was going to be very difficult to get our hands on.
Fantastic. So maybe a follow-up question to that is, there's so much out there. There's so many applications. And there is an expectation versus reality when it comes to what an insurer can do when they begin, depending upon the data sets that they have and the capabilities that they internally have versus they may externally need to get in. So you work with other industries, and, you know, would love to understand, how do you guide, between, you have insurtech players who actually offer solutions like this, as well as large insurers who are looking to build models or build products and solutions that actually go. What should an insurer internalize? What should an insurer start investing into before they can even get anywhere? What should an insurer say, hey, this is not something that will ever be my core competency, let me go out and find a partner who can work with me on this?
I think the number one question that you have to ask yourself is, what do I want to do exactly? And this is the confusion that a lot of people get into. You know, they want to get into the wagon of AI. AI is cool, let's do that, let's do this and everything. But if you don't have a concrete question, something that you really want to tackle from the get-go, there's no point of even accumulating data. So, and the second part is, data comes in all shapes and formats, right? You have your Excel sheets, you have your ERP systems and everything. But most of the time, we have a saying in the computer science world, we call it garbage in, garbage out. And so to really get the best benefit of AI in any situation, be it insurance or banking or whatever it is, you have to really make sure that your data is correct. There's no way around it. And then there are some common themes across corporates. For example, KYC, know your customer, sentiment analysis, the thing that we talked about earlier in the beginning. These are really trivial use cases that you can get your hands dirty in the beginning. For example, we have a product that goes with the name Abby. It's a chatbot that we deploy internally, and it really helps a lot those companies. Most of the time that we spend an hour, 8 hours work, is actually just looking for data, trying to get information from here to there. But with, you know, that perfect use case, you know, where you have that super intelligent AI that exactly knows where to find the information, it makes it so seamless for you as an experience. And for me personally, as somebody who believes in the value of time, I think when you spare, you know, like a decent amount of hours in a specific day, you really have a lot of time to tackle different things that are really worth the time.
Yeah, makes sense.
I think I would like to add a couple of points on what Ameen had said from a business point of view. the step that we have to always get back to is that we should always be very careful of not getting involved in the hype of anything. Like you said, it's just like a big thing and everybody talks about it. And some companies feel the pressure that we have to be a part of that because everybody else is doing it. So, and then after investment and getting there and being there, and then you would think, did I really need it, or what did I do, or what am I going to do with all of this
Blockchain
now?
is an example of that. It has a very notorious reputation.
Right, and the other thing is that once a company decides or feels that they must be in that space or do something with that, then it's definitely something that should not be held or left at an IT level at that company. It's actually a very senior thing that should go up all the way to executive management as well as the board sometimes. Now everybody's talking about having a digital strategy in place. It's not just like, you know, someone thinking that I need to do something or develop that and then just go about it, because it's a serious investment that if you are into it, then obviously you have to invest in it and then make sure that it's a sustainable plan that, you know, over a medium to long term.
Got it. No, this is very insightful. And then, you know, once you have or you start building these capabilities as an insurer, when you put the ecosystem together, you actually start seeing better input data, alternative data streams, strong AI models being put in place, and as a result, incredible use cases. And then, you know, what I would love to maybe chat with you on is, what are some of your top either use cases that you're seeing in action, use cases that are work in progress, or even predictions across different parts of the value chain, if you will. And maybe I'll start with you on, you know, maybe, you know, are there any use cases that you see for micro segments, for specific customer types, where you understand that customer and then build insurance products and solutions, or showcase insurance products and solutions specifically for that customer? Do you see anything of that coming in the next 1 to 3 years?
Absolutely. I think we started seeing it already, and it's just going to go, you know, there will be more emphasis on that going forward. Now that we're able to collect relevant information on customers, and by that, you know, I don't only mean what their needs are, but you're also talking about preferences, you're also talking about financial abilities as well. Now you are in a better position to develop products that are more meaningful to them. So not because I think it's fancy and it's going to just sell, but now it's working the other way around. It's always worked the other way around as well, but the AI and the availability of data now makes it even more doable in a better way. So now we start by looking at the needs, at the preferences, at the customer profile, but also, can they afford it, can they not? Sometimes insurance is expensive for large segments of the society, and it's not seen as a necessity, and that's why a lot of people run without insurance. So if we can dive deep into that and see, okay, maybe this person does not require this entire coverage, only this. And by focusing on developing something around it, the premium could come down from whatever I was offering it all these years to, I don't know, maybe 30%. And now you're making it affordable to this class of the society. And you're offering, you're including more and more people in the insurance industry, basically, and you're bringing them on. So it helps when you understand your customers and you have the tools to actually get to that.
And maybe the question to you would, how do you make that happen?
Before getting into that, some of the most amazing use cases in the way that I've seen lately is KYC. I'm really excited about how KYC is working. For the very long time, trust has been a very huge deal for us in financial institutions, be it insurance or banking. And so there's been this sort of explosion that happened in the last couple of years where people are becoming so generative when it comes to generating data, right? So you have your Instagram, your social media like Twitter and Facebook, and you're just being so verbose. You're giving a lot of people so much information, which could be bad on the topic of privacy again. But at the same time, as a business, you can really benefit because for a very long time, I'll give you an example. Like in banking, KYC, it's a horrible journey, to be quite honest, and you probably know this. You have a lot of people trying to investigate and trying to understand if their client is not doing anything shady on the side. But if you have that amount of work, that amount of data just scattering the web, just waiting for you to use it, this is beautiful. And the other aspect is that I'm really excited about is open banking. You know, open banking, again, just like blockchain, some people have different views on it, but for me, the ability for banks to open up for consumers, you know, for developers to utilize and add really solid use cases has been a fantasy of mine, honestly, where you can see the full track record of your customers. So you no longer have to do those shady things on the side where it's like, hey, this guy really playing it well, he doesn't have any shady things on the side. When you have the full track record of your bank account or customer, you can do a lot of better judgment when it comes to those things. Now, to make that happen again, coming back to your question, I'm going to have to reiterate it multiple times. Data comes first. Don't ever think that you can do anything in AI or machine learning to be more exact without getting your hands on data. And again, it has to be really good quality data. You know, if you're coming from the banking world where I come from, data doesn't have that amount of quality, to be quite honest, probably in my experience. And so people would just, like if they're working in a data entry job, they will just shove whatever they have in the keyword and that's it. But in order to have the best value of those prediction machines, those prediction models that you have, you really have to go and be so rigorous when it comes to, you know, validating the data. And then the thing that you probably don't know about if you don't come from the AI world is that the algorithms are already there. There's nothing fancy about it. It's just the most difficult part for you as a business is to take all of this data and then train it according to the questions that you want. So remember in the beginning where we said the number one thing that you have to do apart from data is knowing what you want in the beginning. Are you trying to find if this claim is a fraud or this is, are you trying to find a regression for the pricing that you have? So having clear intention in the beginning is the key deal. You can't just go around like acquiring data and doing things in AI without having a solid...
No, and which brings me to probably my next question, which is one very well talked about use case is building in dynamic pricing models. Exactly. And that is something that is worldwide is being utilized in a very efficient way, either to increase coverage to people who don't have it today, or to increase the amount of coverage, or to increase specific use cases of coverage, for example, chronic disease cover. And, you know, as an insurer, I would be curious to understand, or, you know, where do you see dynamic pricing leading to with respect to products and solutions for customers in the insurance industry?
Dynamic pricing is going to be the only future for insurance, specifically on, with health insurance. Because you're talking about human beings now, right? And you're talking about changing health conditions and life expectancies and all of that. So yes, historically, it's like the pricing, although it evolved over time and it started much worse than where we are today. And we have added a lot of responses to a lot of variables as we learned from experiences, I think if we go back all the way back to when it started. I think the dynamic thing, which had started again, but you know, I think this has to be the future, and everything else will fall aside by then. It will be interactive as well. So it's very dynamic. So now it's like you could actually think that someone from this gender, this age bracket, you could actually think that the premium could range between so and so. Going forward, I don't see that happening because now you're putting more and more underwriting factors, and this is what makes it dynamic, and it could go either way, upwards or downwards. Like you get credit for it, not always thinking about extra mortalities or loadings necessarily. So the more information, the good information, not garbage one, okay? So the more information you feed into your underwriting, obviously that is going to help the healthy ones to come on board because you will be able to incentivize them then. And then the not so healthy ones, which maybe are struggling today to get cover to start with, and they're, you know, by some definitions, they're not insurable at all, you could still be able to devise something specifically for them to cover, you know, stuff with different terms, for example, different prices, or find different ways of covering things with, I don't know, certain healthcare providers, for example. So as I said, it works a lot. It all starts from the prevention and then goes on to, okay, it happened now, what can I do with it? How can I manage it? So the managed care comes into the picture. And then those who I'm excluding today because of their conditions or their ages or whatever, the more information I have, my underwriting is now dynamic, and then I can include them.
Believe it or not, the challenge is not really technical after all. Even though I'm a technical person, I would like to think that the challenge is technical. It's not technical. It's all about data sovereignty. For example, in the US, where you have people who are really open when it comes to sharing their data, there's this thing that we call APIs, or basically integration. So we have your insurance company integrating directly with the health provider in this case, and there's none when it comes to the paperwork just going back and forth, right? Everything is just dynamic and that's it. So the challenge is not technical. It's just about having those entities really coordinate and you know, get a business model that work for the best of those you know, entities all together. And the data is just there. It has to flow from the right people to the right people. It's not about, you know, doing the work manually just like before. Every company has its own empire now. It's just about integration. This is why, coming back to open banking, I'm really excited about what open banking is all about, because for the very long time, banking or banks in this case have been like this sort of black box that nobody really interacts with unless you're coming from the industry.
Right. No, and maybe the preamble to that is risk prediction, because dynamic pricing works very effectively when you have a baseline and then you work backwards or forwards from that. But how do you even get to that baseline? And a lot of insurtech and a lot of insurers are now thinking through what are the solutions that we can offer that allow us to be able to understand baseline data better, that allow us to predict risk better, to allow us to predict a future event better. And maybe again back to the industry expert in the room, what would be the use cases that you see where AI or technology, which is encompassing AI, starts playing a role on the prediction or, you know, the risk stratification side of things?
You will be able to successfully predict when you have sufficient information and over a period of time, and it's real-time information. So if I take it again and relate it to health, life and health, right? So in the example that I mentioned with all the Fitbits and the Apple Watches and all of that, when you are tracing somebody's lifestyle on daily basis, so you are looking at their average calories burnt a day, their blood pressure, for example, their heartbeats, you know, so you would get an idea now, how are they throughout the day over a period of time. So being or having access to this kind of data, this is what gives you the ability to make the right predictions, and whether it's a prevention or whether it's you want to encourage something to go on for a while. The same thing if, although I don't work in motor, but this is also an obvious example, like everybody talks about having those devices which trace your driving behavior. So that also gives them access to, you know, data collection, which is very accurate over a period of time, and it's real-time data as well coming in. So it gives you a better idea, a very clear picture of somebody's driving behavior, and that would now help you predict, I don't know, the rate of accidents or the possibility of an accident happening, or if an accident happened, what do you think, how bad could it be, or whatever that is. So in my opinion, if if we're talking about prediction and, you know, whether we want to stop it or minimize it or whatever, this is the kind of data or this is the kind of sources that we could rely on in order to make that happen.
Got it.
I think the takeaway here is that, you know, there's a lot of sources when it comes to getting data. It's not like before. And the magic, the main need for you as a business developer, somebody who's really trying to take advantage of that, is to think about really solid use cases that can take advantage of those sources. For example, as Inas mentioned, I love Fitbit. I'm a huge endorser to Fitbit, even though I don't get any money for that. But you know, the fact that I carry my Fitbit all the time really generates a lot of data that is on the cloud.
Right.
And for you as a business, just like insurance, it's so easy for you to write a program that interacts with my data. And I'll be more than happy to actually share my data with you if that is going to add to the experience that I get from my insurance company. And so what I'm trying to say here, the use cases are seriously unlimited. If you have a creative mind, it's seriously unlimited because the data is there and the technology really facilitates the whole thing. It's unlike before. It's not like that you have to, you know, do a lot of mundane work getting the data. Now it's just a matter of accessing that data with the right company, and just magical.
And maybe if we had to bring that magic to reality, there are specific products and solutions or entirely new business models that are now being created where we're intersecting insurance with real-time big data, right? So let's take an example of a real-time flight insurance payouts based on delays, where now you have products and solutions both with, underwritten by a reinsurer as well as then having an insurer backing it, where you have an automatic payout the minute a flight gets insured or delayed based on worldwide flight data. So there are situations where there are new products and solutions like the ones we've been speaking about, new features, new subsets. But then there are situations where an entirely new business model is emerging on the back of that. And then maybe
there's one that I would like to add, if you can allow me for a second. Now, blockchain, again, I mean, you might have a lot of love or hate for blockchain, but there are some really genuine use cases that you can build on top of the blockchain. For example, there's a project in the US where you, as a user, can finally really leverage and monetize from your medical data. When you save your data on the blockchain, let's not get technical, but you can really provide your data for an incentive to those insurance companies so they can really train their AI systems after all. So think about it this way. If you have, let's say, 1 million records of your customers, you might want to really expand the circle and get more data. But if you want to get data, you can even get it from the customers themselves if they have the data on the blockchain. If you can't get it from their companies or their medical institutions. So what I'm trying to say, just seconding what you're saying, IoT, blockchain, and even AI, I'm fairly biased toward AI in this case, but the amount of new business models is just crazy. You can do things that are relevant to B2B, B2C. I think it's beautiful. We're living in an amazing era, honestly.
And maybe a health example is where blockchain with AI is being used, with genetic data is actually being used to do a automatic payout for gestational diabetes the minute it happens, because it's linked back to the EMR system, and when the event has happened, you have the data to know that it's genuine, and then the user doesn't have to do anything, the money hits the bank account. So these are examples, but we'd love to understand whether you see other business models completely being reimagined on the back of this intersection of new data, new AI models, and InsurTech and insurance all coming together in the next 1 to 3 years.
You want to add? Like if I had to really wrap it up, I'd say that, business is becoming really difficult, maybe for the giants now, because everything is accessible. For me, as an individual who's working from home, it's pretty easy to get access to data, to build state-of-the-art AI models, AI solutions, and really build on top of the best solutions that are open source in the first place. So it's not like that I have to create the magic inside out, reinvent the wheel. It's just a matter of just getting the right tool and build on top of it. And if you really want to see the startup scene in Bahrain, that's pretty much the deal. So people get open source solutions and they somehow tweak it and tailor it to really fit a need. The technology is there. Data is a challenge, how to really get it. I think now with the data protection thing that I'm really excited about, at least you now as a user, you get to have some rights when it comes to sharing the amount of data that you have. Businesses will no longer have the ability to go and abuse what they know about you. They will have to get your consent. So all in all, I think it's amazing times, honestly. And
maybe that point is the last point to wrap up and open up for questions, which is how do you balance data privacy as an individual with the fact that as a business, unless you have the data, none of these new solutions can ever come to the user to begin with?
I was waiting for you to bring that up, actually, because it's one of the topics that whoever knows me knows that I'm paranoid about, like data leakage and privacy and all of that. So I think that is the one or the major intrinsic risk that I would attach to AI. We said all the positive things about big data and what to do with it and how to collect it and how can we use it for our advantage. But we always have to remember that that risk is running in parallel. And at the moment, I personally, I'm not sure that we can actually eliminate that risk altogether, because it is a risk there that needs to be managed. And obviously, when you have the right resources to manage it, then you're in safe hands. But that is not always the case. So the thing is that, for instance, with the Fitbits or the car, the sensors or whatever, you are getting a lot of data, much more than you need as an insurer. For me, as an insurer now, I need it for the purpose of analyzing lifestyle or behavior. But I'm getting, along with it, additional information that I really don't need, right? So that's invading someone's privacy. And that is where not only my problem, but I think everybody in the AI space cannot really turn a blind eye to. So since he has solutions, maybe he would like to add something to that.
Biased to certain technologies, but I wholeheartedly agree with Anas. That privacy has always been a challenge, and if you think that you really retain your privacy, then definitely you're wrong. I mean, you're probably familiar with the attacks that have happened against Facebook, right? Now, this is a really hard-hitting lesson that security is an important deal that we cannot neglect anymore. And for me personally, as long as we have the human factor involved, we will always be in that goose chase, where we're trying to get the best of our security. And this is what really excites me about blockchain. Again, hate it or love it, depending on how your views are. But the blockchain technology really helps out. Can I borrow yours? Sorry. Not the best days for me here. But what I'm trying to say, the technology, the blockchain technology really allows you technical-wise to go and save your data, to really have full ownership of their data. So this is why I'm super excited about blockchain, because for the first time, my fate, my data fate is not in the hands of another company, I wholeheartedly, have the ownership over my data, which again raises a lot of challenges for me, because think about it in this way. If you lose your ATM card now, what you can do is go to the bank, get a new one if you present your IDs, and you're good to go, right? In the blockchain space, if you lose your ID, you're done. You're good. You're good. So there's a lot of technical challenges to it, but I mean, for me, the perks are amazing. You no longer have to go and trust a middleman, to facilitate your operations. You can really take 100% ownership of your data.
No, got it. And with that, we'd love to bring this panel to a close and open it up for questions. The conclusion here is AI is here to stay, blockchain is here to stay, and AI-enabled solutions are coming up. Now, those that don't come on board will eventually get left out, but at the end of the day, there is more in it for your end customer, and that's what we're all in it for. So thank you so much for your time. Do we have time for any questions? Are there any questions? Oh. Yeah.
Using these devices such as Fitbit or the device, you start thinking that the people who own these devices are coming from a specific socioeconomic background, and I think that creates some kind of bias in our results for the AI agent or any kind of solution. So how can you counter that, especially that we know in this region, maybe not a lot of people really appreciate such devices or even purchase them because of the privacy issues. So how can you create a fair AI or a fair solution that can bring you a good prediction when your data sources is maybe not that diverse, I would say, because probably the people who own a Fitbit or own that expensive device inside their car are coming from a specific background. So how can we diversify our data sources, especially in this region, in Bahrain or in the MENA regions generally? So that's the question. Anyone, honestly, I'm very interested to know how can you counter such difficulty. Because in the US or in the UK or in Europe, maybe you can find more people using data collection devices and they wouldn't mind sharing it. However, when you come to a more Arab region, still people عندهم تحفظات على الموضوع, or people can't afford, or maybe it's not very common. So how can I build a good solution when my data source is not that diverse? It will eventually create a bias result, and of course we don't need that when we are doing our testing phase. So what do you think?
Maybe I can answer this as an insurtech provider, not necessarily as an insurance player. The bias doesn't necessarily lie in the system if you're able to understand that there's a bias, and then for that demographic, these AI models work. But for this demographic, it doesn't, and then you build something else for that. The only correlation that I can come up with right off the top of my head is something that Ant Financial did in China, where there were only 25% of people that were banked, and the rest of the Chinese population was unbanked. And then, but they all had mobile phones. So what Ant Financial did was they created what they call a Sesame Score, where they took social data, they took behavioral data, and they took whatever transactional data they could find of that user, and then made a score out of it. And as a result of which today it covers 65 to 70% of the entire Chinese population on the back of models that never existed before. And now insurers are building risk prediction models and entire solutions that are catered to customers on the back of that Sesame Score. So sometimes the answer lies in an innovation. You start from the baseline, then you build from there for a population that doesn't have this history, or a population that doesn't have access to connected data. But you have to start from somewhere, and that somewhere could be the smartphone, and then you build it from there.
I think I'd like to add exactly what you said, Abhishek, that there will always be a baseline which is based on general data that is out there. The devices that we had mentioned as an example, it's going the extra step for individual incentives, if you like. So with the entire database or the big data that's available out there, you would always have a baseline that as of today, if I don't use any of those tracking devices, I still have something that I believe it's reasonable and fair for all the entire population to generalize it across them. However, we're trying to sell or encourage people to look after themselves from a health point of view, to look after themselves, the lifestyle, for example, the health conditions and all of that, because we're interested in prevention, and also to incentivize them to do that with the idea that we're helping the society to become a better, in terms of health-wise, a healthier population, but also with the idea that we want to reduce the claims cost, which will help us eventually reduce our rating or premiums to start with. But that is the next step. However, the first step is always, it's fair, it's general, there's always a baseline for all.
Thank you. I think from a technical perspective, model bias has always been an issue. You probably know that. And if you work in a company, you only have access to your data, model bias will always be the case. And think about it, big companies like Amazon and Microsoft still suffer from the same problem, right? Remember the face recognition thing that happened, and you don't really want to blame Amazon, but this is the sort of data that they have access to, right? So I think bias will be an ongoing thing until we come up with really maybe machine learning techniques that are really solid in terms of the status quo currently. The status quo in machine learning is that they have to get a lot of access to data, and then given the way you categorize this data, your model will be efficient, against that. And so there are some really cool tricks like unsupervised learning, really cool tricks, different techniques that can deal with data from a different angle, and that might really eliminate bias. I think, at least I'd love to think. And maybe expanding your data set, which is not an easy thing to do, but to say definitely it is, it could be a different option. Somehow expanding the circle of your data set. But yeah, I think time will tell. Speaking on the Fitbit thing, Bart, I think tackling a different market share, for example, Fitbit has a specific price range, right? But you've got alternatives that are lower in terms of price, but you don't get all those fancy perks that come with the Fitbit, right? In terms of data access and APIs and all those things. But if you can somehow manage to do a conditioning pipeline for the data that comes from those external vendors, apart from Fitbit, and then to add them in your data set, that would be really a cool project to work on.
Cool. Thank you so much. With that, we'd like to end the panel. All the speakers are available for further discussion in any of the breaks. Thank you so much for your time.
Thank you very much.